What's up, traders? Welcome back to another video. Today I want to do a comparison between two instruments. I will do a comparison between Nasdaq and gold on the setups that formed yesterday. And yesterday I had a losing trade, and I have learned, and I want to show you where my mistake was so that you don't do that mistake again. Now, we'll start with gold. Now, as you can see, we have our high of the week right above there, and then we have our high of the day and our low of the day. That is prior to the New York window open at 8 a.m. Now, the procedure is the same. We are only trading at the high or at the low of the day, high of the week, high of the month. Now, the first hour sets the high and the low of the session as usual. And we have our low of the session. I don't really need to plot the high of the session because it's irrelevant for us right now. We are only looking at setups that are at the high of the day. Now, as you can see, the market came to the high of the day, pinned the high of the day. Now, this is the mistake that I did. There was the break in structure here. Alright? But the procedure is usually we want to go, let me draw for you. So we have our high there and we have our low there. Now, this is what happens. We want the market to go to the high of the day and then come back again to the high of the day and trigger the high of the day to give us an M pattern near above or above the high of the day, and then break of structure. Once they break structure, we want them to come back again for the retest and then give us an engulfment for the move down. Alright? Now, this is where I made the mistake. The market came to the high of the day, triggered the high of the day, but there was no M pattern. This is key. M pattern. Now, you might, for me, well, as I was looking at this lifetime, I was telling myself this is the M pattern. But but when I was also getting into the trade, I was expecting a stop hunt. Now, once you see this setup, this is the textbook setup. So, when you look at this trade, what we wanted is, once they pin that high, we want that market to give us an M above double zeros here, above the high or near the high, and then break structure, retest, continue. But this was a very big, this is a very big range for a stop loss. So, what did the market do? The market came back to stop hunt guys like me who entered in early. I entered right here, 9:56, and I got stopped out. But the market went back again to the high to stop hunt the high of the day, high of the week. So once they go to the high of the week, 50 pips, 50 pips above the high of the week, as you can see. Above the high of the week. And then now they broke structure. They stop hunted the high of the week. Then, you know, they gave us now that pattern here. So they come to the high of the week, then give us an M pattern with a break of structure, and then upon the retest, now we are looking for the engulfment for the entry. So those who are confused about the break of structure here, this red bar represents, you know, a higher high or a higher low. I think it's a higher low. They went up, they came down, they went up again, but failed, and then they went back again, and then they broke structure. This is where they broke structure. And then a retest. Now, this is where the retest and the engulfment was, which would have been our entry for, you know, our 30 pips, 25 pips, whatever. So, lesson learned. Once the market does not give this structure, this is our textbook setup, this right here. We want the market to come to the high of the day and then come back again to stop hunt it, to give us our M structure. Now, another giveaway was that, look at, this is the high of the day and this is the high of the week. Automatically, they must have, there was liquidity at the high of the week. I don't know how I did not see that, but, you know, trading is a process and every trade is unique. So, that was the trade for gold. Let's go to Nasdaq. Nasdaq gave us a textbook setup also. And, well, for Nasdaq, it's easy because, well, so we have the high of the day and the low of the day right here. So what does the market do? The market comes down. The first hour sets the low of the day, the low of the session. As you can see, beginning of the day, this is the low of the session, the low of the day prior to the New York market open. Now, the market comes down to the low of the day, 25 pips below, and gives us that M pattern that we are looking for. And then they break structure. They break structure. So, what are we looking for? We are looking for a retest for the continuation. Now, this is our low of the day now. Now, keep in mind, and as long as we've not broken the low of the day, the setup is still valid. So, the market gave us our M pattern and then broke structure. So, on the retest, we are looking for an engulfment. Any engulfment will be our entry. So they come down, and then they give us the engulfment at 9:58. Just 2 minutes to the close of the last 15-minute candle in that hour. This is where our entry is, with our 25 pips stop loss. You know, for our 30 pips, 25 pips, whatever, 50 pips, whatever it is. But, you know, for me, I usually am comfortable with 25, 30 pips. And it's simple, just like that. So hopefully those who maybe yesterday was stopped out like me in gold, hope you learned something. Those who got the trade on Nasdaq, kudos, good job. Stay disciplined, stay focused, always learn. Once you get that losing trade, it's an opportunity for you to learn something new. The winners don't teach you anything because, well, you are doing what is working. But if something goes wrong, you know that, hey, I have an opportunity to improve myself. So stay disciplined, stay focused. May the markets go with you. See you in the next video. Peace out.